Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, December 30th, 2019. What we'll do is start out, take a look at the broad markets, and touch on some of the major asset classes that are really related or closely interrelated. I want to talk on crude oil real quick, the U.S. dollar, gold. I'll cover palladium as well. That's not a major asset class, but we have an active trade on that, and it's traded highly correlated to the stock market recently, so we'll hit on that. And when I go over crude oil, I definitely want to point some things out there. I'm going to go over the just a quick update on XLE, XOP, and XES, the energy sector ETF. So, all right, start out here with QQQ. I put out a post this morning, so if you're listening to this video, you probably already saw that post. We had, sell signals is about as good as they can look now. You have to factor that in with the fact the market's been extremely resilient. It's in a strong uptrend. Dips have been getting bought. With that being said, like I said earlier in the post today, it's about as good as you can get for a sell signal. It would normally be if the trend wasn't so resilient right now, it might normally be a strong sell signal, something where I'd added a QQQ as an active short trade, might be looking for more. But remember, we only have today and an abbreviated trading session tomorrow, last two trading days of the year. And, with the trend being up, anything's possible, so I want to be on the lookout for anything big. But let me not sound like I'm waffling here. We have sell signals. I am short. I added to those shorts today. I will add again if we break down here. But like I said, they're not strong sell signals, or at least not all-in sell signals due to the nature of the trend right now. So let's just talk levels real quick and what may happen. There's the sell signal. Like I said, that's impulsive. That's about as impulsive as it gets. That is the biggest red candle. It's bigger than this one right here that started that bear flag. It is by far the biggest red candle here in months. And so, like I said, on a scale 1 to 10, that's for a breakdown, clean trend line, impulsive selling. That's close to a 10. That's what you want to look for. Like I said, 211.42 is my first support level, and you can see we hit it almost perfectly right there. 211.47 the bottom of that candle. Hit it again there. Dipped it just briefly below it, closed that 60-minute candle above. This is what I talk about, a reaction I define as a bounce and or consolidation on the initial tag of a level. And so we're getting it so far, and as I said this morning, as I expected, it would probably be relatively minor. I'm not, whereas I normally cover and reverse and go long, I'm going to ride this one out because I think they're going to go ahead and take it down. I don't expect much of a bounce. What I mean by that, I don't think, and now anything's possible. Maybe that's it for the whole correction. Maybe we go into new highs. Maybe. I doubt it. Normally I might try to game, reverse, go short to long there, look for a back test, recycle back in, things like that. But I suspect this bounce will be relatively muted, meaning minor in scope and duration. Scope is how far you bounce, duration is how long you consolidate or go around. So that's what I think, and unless we break down, and when we will, that's why I'm doing this video. See this that 60-minute candle from the 11 a.m. candle right there? You can see the pop-up box on the left. The low on that candle was 211.16. If we take that out, that probably opens the door for a leg down to my next target there. So again, I'm going to stay short now, stick to my shorts. Even added a little bit this morning because we broke down, it was impulsive. And this is a little flagging type action so far. So look for an impulsive breakdown below that flag. Look for a break below the 11 a.m. candle right there, and that should open the door to that what I still have is really my minimum target. This was a first target, minor support, expected a reaction, but I think we go down here, test the top of that gap, that big old gap right here from the 16th it was. And I favor that gap being backfilled. So if you want to know, and this is a micro call, take it with a grain of salt, but this is how I think it happens. I think we'll break down soon. Maybe by the time you get this, I get the video out to you guys and you're watching the video. Reaction off 209.11, we'll probably step in, probably, and then go down here to 207.50ish right there, backfill the gap. At that point, you could probably have a decent reaction, maybe a tradable reaction. So if you're not an active trader, and if you're even short, you might, I guarantee, well, I imagine that a good percentage of people who listen to my voice have no desire to short this market now, and I get that, and that's fine. Don't do anything you're not comfortable with, but if you are shorting, or even if you're long, you're a bull, you're long, you're listening to this video, and you're looking for levels to buy dips. I always say, I'll tell you what I think the market's going to do, and where my primary skill set lies in is identifying key levels, whether they're trend lines, chart patterns, support levels, resistance levels that are likely to come into play if and when hit. So therefore, dip buyer, if you think the market's going to rip into year end, well, there was your first dip to buy. It was the biggest drop that we've had in months right there, at least on a 60-minute candle. And you could have stepped in at 211.41 and you'd be doing good. So, well, I shouldn't say that. We haven't gone up yet. The next level 209 and then 206.46. So like I said, based on what I'm seeing here, probably get some flagging action, which we're getting now, break down, move down to at least 209.11. So that's where the this correction could end right there if we are going to go to new highs from here. Leaning towards this target right there, 207.46, call it 207.50, and there's certainly the potential for more, as I covered in Friday's video, when you go out to the daily charts, depending on how it looks. So far we have a breakdown here on this daily trend line, this price channel here, and how do we close today? How do we follow through tomorrow? And when trading again opens, we're going to remember the markets will be closed Wednesday for New Year's Day. And how do we pick up and resume on Thursday? I could just eyeballing this chart right here. Let me give you a key level. I could easily see a test, another test back of around. Let's see, it should be right here. Let me take this line away. Let me clean this chart up for you guys. Should have done that before. Nope, don't take them all away. Delete this one. 206.33. You can see there's some nice reactions there. And so if you're swinging this and want to leave it open to the potential for more, possibly down here to 200 level. Let's just go back to the 60-minute chart. Let's not even talk daily charts now. Let's just see what happens. We got to first see if today closes red. If they buy this thing up, rally it up, close the market green. Well, even if they did that, here's right here. This is the close Friday. You can see that yellow dotted line, or dash line, and then the blue dash line. That's Friday's close right here, and there's today's open. We gapped down a little bit, and coming back to just close it green would really just give us a back test. I can tell you this right now. I can say it. I can't guarantee where the market's going, but I see a lot of objective short entries. I've seen objective short entry, well, of course, today when we broke down. I see an objective short entry if they happen to rally it back to anywhere towards a flat for the day, or slightly green, because that would put us right back for a back test. And of course, as I just said earlier, the next objective short entry would come on a break of that 211.42 level, but you want to be safe. Just let them take out the reaction low. That's usually where the stops are. Everybody has their stops under that reaction low. Those that bought the dip, there's probably a lot of stops. So once they take that out, boom, down there. And that would constitute a drop of another 1.4%. We're already down off the recent highs right now. We've dropped into the low today about 1.5%. So that's good for about that 3% minimum pullback that I've been looking for. And we'll see what happens from there. SPY, I had this line here. Let me add that. Let me give you the price level. That was a line I had on the chart, I believe, on the video Friday. You can see it today. There's that reaction. I had these reaction lows, reaction highs right there, and lows. And that's at about 320.92, and so far that's what I refer to as a reaction. Again, I define a reaction, it's just my terminology. It's either a consolidation or a bounce off a level. And when you consolidate instead of bounce, it just shows weaker supply demand it's early, supply demand dynamics, meaning that the dip buyers should be stepping in here because they've been buying every little dip back to support, and if they don't step in, where are they? And if we come on down through here, do they step in? I mean, that would be a natural. Again, if I was bullish and I thought the market had a more favorable risk reward profile right now, and I thought we were going to rally into year end and into throughout the rest of this week, then I'd be looking to buy here. However, I'm not. I think we'll get a reaction off 319.50ish right there on SPY, and then just like QQQ, probably go on to backfill that gap and quite possibly more. You can see some of the levels here. So let's just say right now, let's just say this is my minimum preferred, what I call minimum preferred target, where I think we're going to get, and right now my max near-term target. That can all change. It again depends if and when we get there. How does it look? Is it impulsive? What's the volume like? What's going on? Do we just hit these levels and have very little, if any, reactions and go on through them? Then that tells me that the buyers have left the building. They've stepped aside for the time being, and so near term we have some more bearish technicals. So that would be, so let's just say right now until we get a significant, maybe a level where I'd be interested in reversing. Now, I don't have a position in SPY, but if SPY gets here and QQQ and the small caps, I'm trading NQ and RTY, the small cap futures, and the small cap ETFs, a couple counts, though that would be a drop of about 1.77%. So if we got there and QQQ and IWM were at or near supports at the same time, and I thought they were going to reverse, that's the point that I might be interested in reversing. Small caps. Small caps hit 168.84. I'm sorry, 164.84. That was my first target. Minor support, and so far, as expected, a reaction there. 1, 2, count them, 3 candlesticks so far, testing that level, and so far, again, a very muted reaction. Not seeing a lot of buyers step in. You're just seeing the sellers kind of abate, step aside, and again, the theme here as I'm doing the video. QQQ at support at my first target. SPY at support at my first target. IWM. This is not coincidence that all these levels come in together. And so what you need to do is see all three of them break. Ideally, both SPY and QQQ. And of all three, QQQ to me is the most important. But again, QQQ could whip down there, and if SPY holds and IWM holds, maybe QQQ gets a little whipsaw signal. So just keep an eye on all of them. Whether you're trading one or all three, you want to keep these on your radar and watch for a break of that level. And you can see 163 is the next target on IWM. That would be a drop of another 1.37%. And this is my preferred swing target now down here, and that's a drop of about another 3%. So if you're a small cap trader, you can, IWM, you can use TZA, it's a 3 times short, leverage short. TWM is 2 times leverage short, or of course you can trade futures, and you have both the RTY, which is the small cap, the Russell 2000 futures contract, and then you have R2K, the number 2. R2K, I believe, is the Russell E-mini future. So if you like futures, but the contract size is a little big for you, take a look at those E-minis. I actually should say E-micros. The RTY is the E-mini futures. The R2K is the micro futures, the smaller contract. Okay, now speaking of futures, let's just look at that, because I did have a request after I posted that chart this morning. Randy, what are your levels on NQ? And here it is. Same levels. I believe they were all covered in the video Friday. If not, you can check under the this morning's first post. You'll see this chart. That was it. The key levels, of course, where the trend line was the most important. We broke the trend line right here. And that was Friday's action. Remember, I talked about that at the close. And then boom, we broke down and never really looked back. Went down a little bit, and after the starter stepped onto the field, meaning at 9:30 a.m. when the opening bell for the market started, that's when you see the market's true colors. And that's why sometimes I'll wait in the morning if there's not a lot of developments. Wait to see after the after trading opens at 9:30 before I do an update, and you can see, boom, they took it out with conviction. That I'm talking about the next level. So the breakdown was already in play this morning, and then 87.45, 87.46 was the first support. Boom, right down through it impulsively. So when you look at our NQ from an objective perspective, if you, let's say, missed the short entry so far, or you shorted and you want to add to it, it's flagging right now. So I see 2 objective entries. I see either push back to 87.46 ish with a stop somewhat above. You can, that line right here, is a minor support or resistance now. So you could short there at 87.46, but not too far above. Just leave it there and put your stop somewhere there. Or if we get an impulsive breakdown out of this flag right here, this flagging action that we're doing now, and that's your next target down there, 86.25. And if you trade NQ, I don't have to tell you, how profitable a 1% drop is. It's going to be over $1,000 per contract. So that's one option there. And you can see all the levels right there. So this one, I think if things get ugly, we come down here right now to about 84, 86, but at the very minimum at this point. And again, anything's possible. There's 2 trading days left in the year. Maybe we'll see some window dressing. I don't know. I can sit here and speculate and guess. There's always an infinite number of scenarios. All I can tell you is objective to short up to, but not. I wouldn't add if they take above there. And I would have stops in place somewhat above. Again, it depends on your entry price and your price target. So I can't give. There's not a one size fits all for suggested stops. It all depends on those factors. Like I said, your entry price, your price targets. Are you scaling in? Averaging into a position? Or did you take a single position? What our risk reward ratio do you like to use? Typically I like a 3-to-1 or better, and so that will also determine where your stop is relative to your price target. So that's it. We'll see what happens today. I'll be very eager to see how the market closes today, but I'm still favoring more downside, and potentially as much as all the way to down here for now. Let's just focus on this sweet spot. Let's just see if we can get down to this range here, and then how it looks at that time. By the way, if we do hit that target, if we can reverse soon, maybe a little more flagging needs to be done. If we get a nice little flag here, there's your flagpole. There's your measured target, would be the distance of the flagpole added to the top of the flag, and that would roughly bring you down there to that 86.25 target. All right, a few more, and we'll roll on to the crude and gold. There's ES. Let me zoom in a little bit for you. All right, like this, and so you can see just like SPY. Remember, ES broke down just like SPY ahead of NQ. I had a little bit different draw on the SPY chart, but this is the trend line I'm watching on ES. We broke down on Friday. We back tested, came in, Sunday night, and then this morning, boom, big leg down. That's when NQ dropped. Everything dropped right at the open. And you can see we smashed through the first support, 33.32-ish. Next support, 32.24. And we had a little momentum fueled overshoot, as I like to call it. Had a lot of downward velocity going in there, carried down through it, and right now we're back testing. We're still a hair above it. I'm sorry, a hair below it. So I have to say, it's objective to short here on ES if that's your trading vehicle, with a bounce up to this level, 32.32. But again, I wouldn't add below there. You wouldn't want, not necessarily stop out that tight, but you'd want your stops somewhere in here, again depending on how much you're targeting. And so let's look at those potential targets. All right, that would be pretty decent support here, about 32.02, 31.90 right there. That's the support zone. It's in close proximity. You can see that trading range there. And then if things get a little bit ugly, I think we come on down here to about 31.62. So we'll see. First things first. Let's see if this breakdown sticks. Let's see if we flag here, get another leg down today or soon, and if so, where we go from there. RTY, small cap futures. And again, if you trade the micro contracts of NQ or ES, all of those, they trade off the same charts and the same levels. So the price levels are going to be the same. They just have a smaller multiplier, which means leverage factor involved. And so, I mean, a perfect, look at that. I had that target there last week of 1659.37. I mean, there is no, they don't print to that number. So let's see where it was right there. If I can get a pop-up box here, and trying to, yeah, 16. I had it there. Bear with me, guys. 1659.40. Yeah, it trades in 10-point increments, so that rounds up 1659.40. Again, when on this charting platform, when you put the lines, for whatever reason, it kind of annoys me. They don't snap to the nearest numbers. For example, NQ and ES trade in quarter-point increments. RTY, the small cap futures, trades in tenth of a point increments. So 0.1, 0.2, 0.3. So that would be 169.40. And that's exactly the low so far. So you can see that, the algos or the traders or a combination of both are stepping in and they're buying these levels. So now we know that's a significant level. We had the reaction there so far that that's why the line's placed there, where a reaction's likely. There's something to note. We have potential divergence right now. It's not confirmed, but it's potential. So should the markets reverse, maybe these divergences play out. But looking at the larger picture, this negative divergence dwarfs this positive divergence here. And again, this positive divergence right now is only potential. It's not yet confirmed. We'd have to have a bullish crossover here on the PPO to put in a higher low. And so again, something to watch, and this is also a reason why you don't get married. As as convincing and as impulsive as these breakdowns are today, doesn't guarantee that they're going to play out. Like I said, there's a voracious bid in the market right now, or has been, and we'll see if that continues. And I'll do a follow-up end of day video today since we have these sell signals. So I'll let you know my thoughts. And again, I'll be very curious to see how we close. Do they buy this up, undo these big bearish candles this morning, and start moving up higher? But there's a level that that would be my max bounce target right now on RTY if you're trading that. It's pretty decent resistance, about 16, we'll call it 1680 to be safe. And then, if you were short the small caps, or you shorted, or you plan to short, a stop somewhat above that level I think makes sense. Okay, now on to crude oil. Since crude oil is closely related, it's been trading largely in line with the stock market for months now, based on economic outlooks, future growth, expectations in the economy. And you can see we had this trend line break here. Remember, just a week or so ago, we had negative divergence at that high right there. You can see that divergence line should have been extended out. And we had a little pullback to the first support, right about $60. And now we've set up this secondary trend line. And it's pretty nice, well-defined. A lot of reactions under there. I could drag it down just a hair to be safe. Let's put something like that. So watch that trend line if you are a crude trader, whether you're using USO or CL or the energy stocks. I'll go over those in just a second. That was the December 3rd low right there. And you can see we put in a divergent high as well, just like the market, but we have yet to break down on crude, unlike the market. So I'm going to give you one other little micro level to watch here, and that's right about here, I think. So break down to the trend line. There's your be safe number, break of 61.17 or so, and that would once again bring you back to that $60 target. And I think quite possibly, especially if the market hits those lower targets that I just gave you on ES and NQ, maybe down here, possibly this trend line again. We haven't touched that trend line now in a while, and that would be a pretty big drop for crude. I can tell you that I had a position in one of my long-term swing accounts of it was a 3-time leverage. Let me look at Gush, and it was up 41% today. So I've been doing very well. That's Gush is when you want to be in those 3-time ETFs, or when you have these unidirectional, pretty strong trends in the underlying security. But that would be a drop of about 7.5% if we got down there, and that would, let me take a look at those other charts for you and show you what I'm talking about. Gush tracks XOP. XOP, this is what I call a unidirectional trend. I'm going to show you something, and I've covered this many times in the past in videos, and I also in the FAQ page under, if you go to the resources link at the top of the site, bring you into the support center, there's a link to the FAQ page, and then those FAQ questions are subcategorized by categories, and there's one trading ETF related questions. And I talk about how leverage can work in your favor. So what I'm doing there is off that low from early December, XOP gained 20.85%. You can see if I have that, if I snapped to the top of that candle right there, yeah, 20.85%. Again, that's off the low on December 3rd. Now Gush, which is the 3-time leveraged, and it tracks the same exact index over that same time period, did 74.63%. So that instead of 60, 62, whatever percent, which would have been 3 times the gain on XOP, you have a gain of 74.63%. So again, this is where you can outperform. And there's all that talk about how these 3-time leverage ETFs are a scourge and they're horrible buy and hold investments. You just got to be in them at the right time. Now, I put a very tight stop today because the markets broke down. They took me out. That may prove to be premature, if these breakdowns fail. But so far, I think it's a good time to tighten up stops because you can see you have that uptrend lines on these energy ETFs as well as crude oil. And again, XOP is the non-leveraged version right there. There it is. There's the uptrend line, which actually broke last week. You can put it right here. That's probably a little bit better fit of that trend line. Let me do it right here. Yeah, either way, you broke Friday or you broke today and we're below trend. Crude hasn't yet broken down. There's USO daily chart here. Didn't have that one marked up. So there it is. So you can see just like CL, and we can go down to a 60-minute chart. We'll probably see the same thing here. And let me give you a line there. That's that trend line I had there on CL. Remember, it came off the lows on December 3rd. At least on CL it was December 3rd. Here it's December 2nd lows. But that's the one to watch on USO if you don't trade futures or if you don't have access to futures. Watch that. You can see the divergences and everything else there. And Platinum, I told you I'd update it because there's an official trade on it. Not much to report. Platinum is so far a non-believer. It's waiting to see if this breakdown is the real deal or not. Remember, we shorted here last week because we broke down below this wedge pattern, as well as a rally back to the 1885 resistance, which you can see. Whether or not this trade pans out, it's hard to argue that that is a key level. Look at that, right up to it, and then boom, stopped it cold so far, and the market broke down today. Now the market's, continues to rally as I do this video. Hold those support levels, I should say. It's still flagging, and so what I suspect is if and when the markets break down and take out today's earlier lows and take another leg down, that's when the Palladium traders will realize, hey, this is the real deal. The market's dropping, so now we need to sell Palladium because it's been correlated with the stock market due to growth expectations. And of course, likewise, I probably doesn't, I don't need to say it. It's stands to reason. But if the market somehow shrugs off these breakdowns, powers on, takes out the previous highs, and keeps going, then yeah, this trade will probably be stopped out, and you still have resistance up here at 1925. And that would be a max stop if you're trying to swing this down. If you have a long-term target down here in Palladium, that would be a max stop a little bit above that 1926-ish level. Gold, these are gold futures. Gold's in a pretty decent technical posture right now. Right here, you had this downtrend line I highlighted before. We overshot it on what at first appeared to be a momentum fueled overshoot, and it was, but we've been consolidating above it, not below it. Now I would have suspected that we would have went down and consolidated below it, but we've been above it, so we'll see. Now when I look at the daily chart, I mean, of course, I've covered gold quite a bit, so I don't want to go too deep into this. I don't want to do an extensive analysis, but let's go to GLD. The bigger picture had us breaking out here on above this symmetrical triangle. The blue lines right there, breakout, rallied right to that 142.85 resistance. We still need to take that out, and I think it'll happen, especially if the market takes another leg down. We'll continue up in gold, I think. So let's just say, to keep it very clear, near-term bullish on gold. I think gold's flagging. Go back to that GC contract right there. This could be bull flag in gold right here, this consolidation period right here. So we're flagging, and here's your flagpole. And if the market takes another leg down, especially if it hits some of those longer-term targets, longer-term, near-term targets that I just showed you, then gold would likely break out here. You have some resistance there, about 1530-ish to contend with, but that would be the bullish scenario for gold. And it meshes well my longer-term outlook as well. Intermediate-term outlook is bullish because we finally broke out of this triangle in that downtrend line. But remember, big part of my analysis on gold is the analysis on the dollar and the US dollar. This is UUP. breakdown back test. It's been moving lower. It's coming up on support now. So, and it's getting a little bit, actually I shouldn't say a little bit, a lot oversold. You can see down here on the daily chart right there. That's the deepest oversold reading that we've had in a while, 22.44. We're that oversold, or not even that oversold down here at the lows. We were oversold right here. So keep that in mind. That now, here's the thing too, is gold doesn't have to have the dollar falling to rally. There are times where gold will rally on its own based on whatever factors going on, whether it's a risk on, risk off, or risk on trade, or just bullish developments, technical developments on gold. So I just wanted to say that we are getting stretched near term in the dollar. You know, been bearish the dollar for a while, also bullish on the euro. I haven't updated that chart for you guys in a while for E7. But there it is. I have E7 also at resistance. My 1.1275 target has now been hit, and that's pretty decent resistance. You can see back here, you can see these other reactions there. So near term, I mean, it is possible oversold can become more oversold on the dollar, and overbought can become more overbought. And if you look at it this way, if I zoom in here, I'm going to show you, I'm just going to say my convictions aren't that strong on whether we reverse here or not, because you can look at it this way. That looks like a nice bull flag right there. There's your flagpole, and dollar or the euro could break out, and if it did, and it has broken out, but if that's the real deal, and if it doesn't get rejected here at that 112.75 level, we could see another thrust up in the euro, which would take the dollar down. And then that's again just an additional tailwind for a trade in gold. Let me wrap up here. I said I'd cover the energy stocks. I've mentioned XES is, you know, and XOP is my two favorites in the sector, and XES is also at resistance. And again, guys, where this goes will depend on where crude goes. So watch that level, crude futures. Look what happened as I'm doing the video. Boom, breakdown of the trend line. So there's a sell signal. We don't have a 60-minute close yet, but if we do get a 60-minute close, and I suspect we will based on where I think the stock market's going. So hey, you can short crude here, CL. You can exit your energy longs if you want, if you're an active trader like me. You know, I had that stop hit today, and you know, certainly I think if we get a solid red close or an impulsive break below 61.17, that should put the the nail in the coffin, at least for the near term, for a pullback or correction in crude oil. And I already gave you my targets, so let me not spend any more time there. Let me wrap the video up and get it out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.